don't move your closing funds around, because that was another thing that you had mentioned, is sourcing them. And a lot of people might not be aware of what that is. But what that means is that when you get deposits and they can say, oh, that's money that you got from your employment, and then maybe you have an extra $1,000 that magically appeared in your account, and it might be something that somebody owed you, but they're actually going to source where that money came from to make sure that it's legitimate and what's going on with it. And so they don't want any surprises. So so everything that you have in your account, every deposit, you might think, hey, that's a deposit, it's a good thing, but it still needs to be sourced. And that's something that a lot of people don't understand.
Yeah, and yes, Lori, one of the things that people don't realize that we cannot source cash. So whenever we see a cash deposit, we actually have to back it out. We cannot use those funds as part of the funds that are for down payment. So if anybody's getting a gift from a family member, there are a lot of programs that do allow gifts. Please work with your loan officer before you actually receive the gift so that they can hand walk you through the process to make sure that we can source it the whole way through.
Another thing that that when you come into a mortgage application that you want to look at is changing the employment.
That's a big one because, as I mentioned before, we do go back and we double check employment. We get a verbal on the employment and we re-pull credit 10 days before. It's a soft hit. It doesn't hurt your scores, but we have to make sure that there's no other debts out there. So with employment, if you are currently working for an employer and you have a salary per hourly or even a weekly salary, and now you decide to go on your own and start a business, that can absolutely change your application. When you're self-employed, we have to look at what your company's going to make, and we normally look at a 2-year history. And another thing that people do is, they're trying to get money. So sometimes they'll go out and they'll sell things that they have in order to get the funds they need for purchase of a home. And that's okay, but you also need to have the tracking of that. You need to have an invoice. You need to have where you have a check paid to you. It needs to be traceable funds. So,
Right.
Remember to have a bill of sale if you're selling a car, anything that you're selling in order, we want you to have the monies for the down payment, but we want those funds to be usable.
And the other thing that people have sometimes found frustrating is they think, well, you're asking me for my pay stubs and I already gave you the pay stubs and they need to see them again. But that is very critical in today's lending environment. It's normal for you to be asked for things again.
Well, sometimes when you provide one document, there'll be something on there that the underwriter will now say, well, now I need to see something else. Mm-hmm. So yes, we try our best in our due diligence to ask you for everything up front. But sometimes when you're providing, like I mentioned earlier, if you give me a bank statement that shows a transfer from another account, I may have to go back and now say I need that account as well.
But right now we are historically at very good interest rates. And even though people have said that they were going to go up, they did take a little hike up, but it's minimal. It's like quarter percentages.
When I first started, we had the prime rates at 18% and mortgages were 10 and 12%. And I remember when they were at 7% and everyone thought they were great. We're in the 3s and 4s right now. So yes, this is absolutely the time because you could afford more housing with the interest rates being so low.